For this course, we really want you to get an understanding of technical analysis. And from here on out, we'll use the term TA. FA and TA, there you have it. Now to start off, I want you to know that anyone can learn to do TA. It's not difficult. There are just a lot of tools you can use to do TA, and this in the beginning can be somewhat overwhelming. So again, it will take you some time to master, but just don't let all the newness scare you away. We're going to take things step by step, really starting from the basics, and you will see soon enough that anyone can master it to eventually use it to your benefit and use it to trade profitably. But to use it to really start to trade profitably, that will take some more time and persistence, and it's not that easy. But if you really put your mind to it, I know from personal experience that it is possible. I'm a big fan of TA, and hopefully throughout the videos I will be able to show you why it is such a powerful way of analyzing, whether it is a stock, a bond, gold, an ETF, or perhaps just Bitcoin. So, but what is TA? Well, the general definition is an analysis methodology for forecasting the direction of prices through the study of past market data, primarily price and volume. Looking at the slide, that is two things that you actually see happening here. This is the Tesla chart, and on the right side we have price. On the bottom we have the date, and two things are indicated here. The blue line is the price line, and the bars in the bottom signify volume. We have a separate video on volume, so don't worry, everything will be step by step. That's pretty easy to understand, I think, this definition. Perhaps, as mentioned, the new term is volume, but that is just the total amount transacted between buyers and sellers. More on that in the separate video. So the general idea of TA is that price and volume, when visualized on a chart, give you a historical view on what an asset was valued at in the past. So it is a direct visualization of supply and demand and price behavior on a chart throughout time. By recognizing certain behaviors and patterns, we can start to analyze these charts and try to predict future price behavior of the asset that we are analyzing. Now, going back to my early days, I remember many people being skeptical of TA, and at the beginning I was too. This is really important to know that first of all, I really considered this to be a bunch of nonsense, like just some lines on a chart. How the hell are you going to be able to make analysis on that and do predictions? These lines don't work, blah, blah, blah. You'll hear it all over the place. But what I've learned, and from my experience, is that this is because when we first see a chart with some lines on it, we are not really aware of the underlying forces that ultimately create these charts and ultimately patterns. So the underlying force, of course, being human behavior in relation to markets and assets. Now we'll go deeper and deeper into this, but for now, know that we'll be looking at price charts, try to understand everything there is to understand, so you can eventually use it to your benefit. So whether this is going to be for longer term investing or short term trading, that doesn't really matter. The end goal is here. The end goal here is to use tools to make sense of the chart in front of us. And that should help us decide where a price may head towards in the future. One thing that I really need to mention right now is actually a part of the next chapter where we'll look at trading, is an instrument called a stop loss. And in the next couple of videos, you will understand, why that is. But a stop loss is important to know. It is a mechanism that you can activate. So much like placing an order to buy or sell something. And this instrument will then close your position at a price that is provided by you. So as mentioned, we'll look at how this works in practice later. But this is a way to limit your loss should price go into the opposite direction of what you thought it would. So it's a protection mechanism, and when we are analyzing patterns, one of the key things that we can learn from our patterns is a price level where we could place our stop loss. So we could, for instance, have three prices. We have a price where we want to buy something. So looking at the Tesla chart right now, price is at $372. And we can say, okay, this is a good point for us to buy Tesla. But if price goes below this point of $327, then I want to be out of the stock. I don't want to own it anymore. Then my analysis was wrong. Then that is a level where you would place a stop loss. So you go to an exchange and first you buy the stock at $372, and at the same time you place this stop loss at $327, and in that way you are protected. Charts and the patterns on charts will give you a good indication of where to place this stop loss. So with that said, you will see why I think it's important to know about that right now. You don't really need to know how to use it yet. That we'll learn in chapter 4. But yeah, important that you know of it and that you understand it. So if you don't, rewind or tell me in Slack that I didn't communicate it properly, and try to understand it. All in all, pay close attention, follow along, and if you have questions, yeah, come find me in Slack and I will clarify things where I can. See you in the actual first technical analysis video where we'll talk about Japanese candlesticks.